And I was surprised, in a way, how quickly silver is going, even though a couple of weeks ago I said silver was on the cusp of catapulting towards 50. That's what I think this massive bull market in gold and silver is going to expose. It's going to expose the fraudulent nature of our monetary and currency system. Uh, and it's not even a bull market. Well, kind of is, I guess, a bull market in gold and silver, but it's more of a collapse or a massive bear market in the fiat currencies.
Silver's recent surge is more than just a price move. It's a clear signal that confidence in the current monetary system is fracturing. After years of hovering below key resistance levels, silver has suddenly accelerated toward the long-watched $50 mark. Even Mario Innecco, who predicted this advance, admits he's surprised by the speed of the rally. To him, this isn't mere speculative excitement. It reflects mounting stress within global fiat currency structures. Gold continues to act as the institutional hedge preferred by central banks, but silver has always been the people's money, and its rise represents a grassroots challenge to financial control mechanisms. With silver now closing above $46 and gaining momentum, this move can no longer be dismissed as short-term volatility. The rally is not about metals gaining value. It's about fiat currencies losing credibility. For decades, authorities have suppressed silver to prevent it from signaling monetary weakness. But as physical demand overwhelms paper-based markets, that suppression is failing. The approach toward $50 marks a critical psychological threshold. Once breached, it won't be silver's price ceiling that breaks. It will be trust in fiat money itself. Further confirming this shift is the behavior of the gold-to-silver ratio. Charts now show silver breaking out relative to gold, mirroring a classic pattern seen in previous precious metal bull markets where silver eventually overtakes gold's performance. Gold will continue to do well, but silver's acceleration signals a shift in investor psychology. People are no longer just seeking safety, they're seeking leverage against currency decay. That change marks not just opportunity, but transformation. If you found this video helpful, don't forget to like, share, and subscribe to stay updated. We'll continue bringing you sharp insights and expert perspectives on gold, silver, and the forces reshaping the financial landscape. Thanks for watching.
But today we're going to look at silver and also at gold, but in particular silver. I think silver, as I said a couple of weeks ago, was on the cusp of catapulting towards 50. And yes, it took quite a few years to break 30, right? We tested 30 back in 2020, 21, and then it was only a year or so ago that we're able to break out of it. But now it's accelerating, and I think what it means is that the current fiat currency monetary system, banking system, is under threat. Yes, silver is very important, and we're going to look at a few things in relationship to that. What's that got to do with silver? Well, I think silver could blow them out of the water, figuratively, of course, because no one really cares about silver anymore. No one realizes how important silver is and why they've been suppressing it for almost 50 years now, since 1980. Well, it's because silver is the money of the people, really. I mean, gold performs well, of course, and is doing very well, but it's more their money. It doesn't mean to say you shouldn't have any gold. But, and I'll give you an example of how great silver is as money and currency. Now with silver at 46, yes, we closed just above $46 yesterday, the spot price. And I was surprised, in a way, how quickly silver is going, even though a couple of weeks ago I said silver was on the cusp of catapulting towards 50, right? But anyway, at current prices, these coins are worth about eight fake dollars, right? Because we don't really have dollars. The dollar is supposed to be a way to silver and a way to gold. So we have fake Federal Reserve currency. Well, yeah, eight. So you can get eight of the fake dollars for this now. So you multiply eight by five, you get $40. I don't know what the minimum wage is in the US, but it's probably a lot less than $40. So that's what I think this massive bull market in gold and silver is going to expose. It's going to expose the fraudulent nature of our monetary and currency system. Uh, and it's not even a bull market. Well, kind of is, I guess, a bull market in gold and silver, but it's more of a collapse or a massive bear market in the fiat currencies. And we're going to look at some charts in a minute. And the 50 level, of course, is really important. Back to silver and yeah, and gold. So I'm going to bring up some charts now. And I think this chart here is telling me that silver is really on its way. And this is the silver price as a percentage of the gold price. It's the gold silver ratio in reverse. And I spoke about this, or it was Michael Oliver who came on the channel about a month or maybe a little longer ago and said that we needed to break out above like one, yeah, 1.2, 1.3%. And then I've been tracking it and I've spoken about it to you guys, yeah, in the past few weeks. And this is a weekly chart, and now you can see that we're really breaking out here. I think when I spoke about silver a couple of weeks ago, we hadn't broken this trend line, and now it's just blown right through it. And so, why is this important? Well, because since the 70s, when the dollar went rogue and became unbacked by anything, there's been bull markets in gold and silver. The 1970s bull market that peaked to 1980, and then the early 2000s or 2000s bull market that started in 2001 or thereabouts and peaked in 2011. Silver always lagged in the beginning, but towards the end of the bull market, silver led the way, and silver outperformed gold massively. And we've been waiting for this for the last 4 or 5 years. And every time it looks like silver is going to start outperforming, it doesn't. And then it kind of has kept gold a little bit under control, but not until not I would say in the last year and a half. But we needed silver to confirm this, and I think what this will mean, of course, is that silver is gonna, and especially also the silver miners, they're gonna go crazy. It doesn't mean to say that gold is not gonna do well, but yeah, silver is gonna do a lot better. Does that mean I'm gonna sell my gold and buy silver? No, I just try to add on to both. In terms of the miners, I would say, yeah, have some. Yes, there is the danger of a great taking. You might be able to get your share certificates from your broker, even though that's becoming more and more difficult. You just need to, I would say, be aware of the risk and manage the risk yourself. I mean, the miners, to me, what I put into it was a small percentage of what I have in physical gold and silver. Now it's becoming a much bigger percentage. Yeah, there will be a time where I'll take profit on those miners, but I think it's still early days. So yeah, this is really important because it means that silver is going to take off relative to gold. This is what this chart is telling us. This is the teacup and handle formation, which I told you about. We're breaking out the end of the quarter. This is a quarterly chart. The end of the quarter, of course, is on Tuesday, and it looks like it's going to be the highest closing quarterly price for silver ever, and that's why I think the 50 level is very important, of course, because we got close to that level, 1980 and 2011. So it's the line in the sand. But if silver can stay above this line until Tuesday, and I think it could, there's a good chance. Then look out above. And as I said, it's going to confirm the failing nature of our monetary system. Yes.
Mario Innecco argues that the decline of fiat currency is no longer a theoretical warning, it is visibly accelerating in real time. He reflects on recognizing this outcome more than 2 decades ago, acknowledging that while he may have sounded early back then, the exponential rise in debt and financial manipulation has now pushed the system to its breaking point. For years, critics of fiat were mocked as alarmists, while policymakers and economists insisted that money printing and debt expansion could continue indefinitely without consequence. To reinforce his point, he examines the US dollar index. Many assume that a stronger dollar should suppress gold prices, but history shows otherwise. During crises like the 2008 Bear Stearns collapse, gold surged past $1,000 even as the dollar staged temporary rebounds. Since then, both have continued to climb, proving that gold's performance is not strictly dependent on dollar weakness. The real clarity comes when thinking beyond dollar terms. When gold is priced in yen, euros, pounds, or even the traditionally stable Swiss franc, it is reaching all-time highs across the board. This makes it clear. The issue is not a single weakening currency, it is the systemic failure of fiat money. Let's get back to the interview.
I started looking at this fact that fiat would eventually die. And I guess I was over 20 years early, but I knew it would take time. But a lot of people, of course, always said, oh, we can keep increasing the debt, nothing ever happens. But I think right now we're at a point where it's the end game, as Rafi Faber would say. We are in Rafi Faber's end game. And yeah, you need to hold on to your gold and silver for dear life, as I've said many times. Yes, you can try to trade in the futures or ETFs, but that's a dangerous game. I think just holding on to your miners will go a long way, and even just holding physical is going to go a very long way. You shouldn't be greedy with this. I think there's plenty of gains to be made by holding physical. So yeah, this chart, what it tells me, this teacup, this is the price suppression that we've had since 1980. And it's now, yeah, the bullion banks in London and New York and Europe are losing control of it. What do we got here? Oh, yeah, the dollar index. Yes, it's kind of struggling to stay above this trend line. Yes, it could rally the dollar. Some people think if there is geopolitical event in Europe, the dollar could rise. And I don't think that would be negative for gold because look at the lowest level ever in 2008. And I remember exactly, it was in March 2008 when Bear Stearns had to be taken over by JP Morgan. And gold actually reached an all-time high of $1,032. Yeah, 1,032. And the dollar index bottomed at 70.69. So ever since then, the dollar index has been going up, but gold has gone from $1,000 to almost 4,000. So gold and the dollar are not inversely related necessarily. So yeah, that's how I see the dollar index. I wouldn't really put too much importance on the dollar index because it's just measuring the dollar against other fiat currencies that are also collapsing versus gold. And we're going to look at that in a minute. So now I've got the Dow gold ratio, and that's telling me that there's trouble in the stock market as well, because after the bottom in April, the stock market has been rallying, and the Dow rallied against gold, but it formed a rising wedge, which is bearish, and we've broken below the trend line, and now the Dow is accelerating lower relative to gold. And eventually, I see this ratio, of course, going to at least 1 to 1 in the next few years. So let's continue. This is just a chart of the price of gold going back to the early 70s. It just goes to show you how we're still in the early stages of this breakout. Yes, last year I was looking at 2,700, which was around here. We blew through it and then it retested it, and now it's gone back up above it. And yes, this chart is just very bullish. So let's keep going. I've talked about the price of gold in yen. It's only a matter of time that we reach 600,000. So as I said, all fiat currencies are sinking, and they're all gonna buy a lot less gold, which is a bad thing. It means they're becoming more and more worthless. This is the price of gold in pounds, which closed above 2,800, 2,805. I think the high was around 2825 actually. But it's the same setup. I mean, all these currencies are going down the drain, unfortunately. Actually, it is fortunate because that means hopefully that these politicians and stooges will have a lot less power. And I'm not sure they're aware of the fragility of their monetary or fiat monetary system. This is the euro. The euro is blew right through 3,000. We're now at 3,200. And even the venerable Swiss franc closed above 3,000. Gold closed above 3,000 for the first time ever in Swiss francs. So there is no fiat currency haven, not even the Swiss franc. The Swiss franc might be a haven if you think in fiat currencies, but thinking in fiat currencies right now is a really dangerous, totally dangerous and losing proposition, I would say. I want to say there's still time if you've got a lot of fiat reserves in a bank or wherever, and you want to protect it, there's still time, I think, to get some physical gold and silver. I think this market is going to get really wild, and I think the premiums are going to rise quite sharply because we're going to see volatility. And the other thing that I think is going to happen is that the futures market and LBMA, those markets are going to be on their knees because they've been suppressing the price and controlling the price for way too long. And now there's real physical demand for real gold and silver. And that's why ever since 2015, when I started this channel, I always said you need to buy the physical. If you want to defeat the bankers, you need to buy physical. And ETFs are no good. They're no good. They're just bankers like instrument to try to stay in control. So I've been asked many times in the last 10 years, where and how can I buy gold by the viewers and other people, friends, family, colleagues. And I tell them to do their homework and look for a reputable dealer, but I also am affiliated with a couple of dealers.
Gold and silver are no longer just rallying, they are exposing the weakness of the current monetary system. Silver's breakout toward $50 after decades of deliberate price suppression, combined with gold hitting record highs in every major currency, shows that fiat money is rapidly losing purchasing power. The gold-to-silver ratio now resembles previous endgame phases where silver becomes the primary driver of acceleration. In this environment, physical ownership, not futures, ETFs, or paper claims, is proving to be the only reliable defense as fiat currencies continue to devalue across the board. If silver breaks above $50 and physical demand overwhelms paper markets, will governments intervene with restrictions, new taxes, or even consider a return to metal-backed currency? So, stay tuned for clear, data-driven insights into the financial system. Don't forget to like and subscribe so you never miss our weekly updates. Thank you for your continued support and enjoy the video.